Hey, good afternoon, everybody. Going to go over our Forex trades for today, Tuesday, February 9th. We had 3 trades. Some were from late yesterday, last night, or early this morning. So we had 3 trades that we pulled out 22.3 pips on a size-adjusted basis. So we'll go over them in a minute, but first have to touch base on the economic news. It's been crazy. Last night here on the East Coast, we saw that the Japanese 10-year bond, the yield actually traded less than 0%. So obviously it was in the morning in Japan, but it's staggering to me that, and we know that there's been other countries that 2-year paper, 5-year paper, 1-year paper was trading with a negative yield, but this is a 10-year piece of paper from a major economy, Japan, trading with negative rates, which means anyone that buys that paper has to pay the Japanese government the interest, not the other way around, right? Usually, investors, you're investing in a treasury or a bond, and you receive the interest payments from the government, municipality, whatever it is. This is the opposite. So the investors in Japan, and the market last night was down about 900 points at one point. Before I went off to bed, I saw it was down about 880 points. You have the people fund managers and whatnot, so afraid of what's going on in Japan and in other parts of the world that they're willing to buy a negative yielding 10-year piece of paper. And if they have to wait all 10 years, they're willing to pay the Japanese government the interest. Okay, granted, it's I don't know what it was. It was 5-year paper went to negative 0.20%. So 10-year paper was less than 0.1%. So you're talking, it's such a small number, but it's still a negative number, and it's still the investor has to pay. Obviously, the investors are thinking that things are going to get worse and worse and worse, and those bonds will continue to rise in price, driving the yield even more negative, and they can always sell those bonds for a profit. But if they can't, if they are top ticking the bonds and they can't sell them for a profit, they're willing to hold them for the 10-year period or however long that they're hold them within that 10-year period and pay the Japanese government the interest. Absolutely amazing. First time ever in Japan, it went to a negative rate. And another thing I wanted to point out this morning, 30% of global bonds now have negative yields, okay? That is over $7 trillion, and that analysis came from Bloomberg. So as far as 10-year paper goes, Japan and Switzerland both have negative yields. I got it right here. Japan, the negative yield is 0.035%, so less than 0.4%, but it's still negative. In Switzerland, it's actually 0.358%, so it's almost it's about a third of a percentage point of a full percentage point. It's just staggering, right? So you're looking at over $7 trillion, approximately 30% of all government-issued bonds. I'm not talking municipalities. I'm talking, the actual federal governments. Over 7 trillion, approximately 30% of all bonds yielding a negative yield. 2%, you got a whole ton of countries: Switzerland, Sweden, Germany, Netherlands, Finland, Austria, Belgium, France, Ireland, Denmark, Japan. All negative yields. 5-year, you got Switzerland, Germany, Netherlands, Austria, Japan, Belgium, Finland, Sweden, France, and Denmark. All 5-year paper with negative yields. Absolutely amazing to me. Just wanted to point that out. Another thing, the economic number that came out this morning was December wholesale inventories. Came in with a negative 0.3% versus an estimate of negative 0.2%. We now have wholesale inventories. The gap between wholesale inventories and sales hit a record of $140 billion. This is absolutely awful. An awful sign for the economy. It shows companies aren't selling their products, but they continue to make their products. So the inventories are just growing. Sooner or later, companies are going to have to start writing off inventories. They've been missing on the sales, and we've been talking about that. Companies have been missing on sales. They've been artificially inflating their bottom line. Part of that is accounting trick with inventories. Eventually, they're going to have to write off those inventories. And when that happens, you're going to start to see companies missing their earning estimates by wide margins. It's just a bad recipe, and it's a record 140 billion, that gap. It's never been this large. So a lot of bad things going out there. And on top of all that, somehow the Atlanta Fed GDP Now model, which is a pretty good computer model for quarterly GDP numbers, came out and actually increased the first quarter of 2016 GDP from 2.2% to 2.5% on an annualized basis. I don't know what the computer model is thinking for the first quarter. All signs so far is that the first quarter is just going to be absolutely horrible as far as GDP goes, as far as economic growth goes. So I don't know. Maybe the computer model is going to see. It'd be interesting to watch it. I believe it updates every 2 weeks, or every week or so. So it'll be interesting to watch it over the next few weeks to see if it starts to ratchet it back down. Let's go over to 3 trades. We had 2 trades in Euro Aussie. One was a scalp and one was a swing. The first one here was the scalp, which we were in for 20% of our normal size. So we were long this one here, 1.57554, and we sold 1.57755 for 20.1 pips, or adjusted for size 4.0 pips, as we had 20% of our normal size. That was the scalp trade, which I thought was a really good trade. We were in it as well for a swing of 1.57262, and we had a target of about 1.59. We had put an offer out there ahead of that, 1.58900. That's actually where we got filled. Picked up 163.8 pips. We only had 5% of our normal size, so it was equivalent to 8.1 pips. You can see what it did. It went to our forecast of 1.59. Actually, then went through it within a few hours. Went all the way up to 1.60 late last night, before reversing and then making another run early this morning, running up all the way up to 1.61, let's call it 50. So, we left 250 pips on the table. Absolutely, amazing when you see it go to your target and then just rip right through it and just keep going. We only had 5% of our normal size because we were risking, obviously, about 200, 300 pips. I guess we could have pieced out, but the piece out of 5% of our normal size is very difficult because it's such a small position in the overall scheme of things. So, but we'll take it, we'll take it for sure. And then the second trade was a scalp trade last night, which we were short from Aussie Canadian dollar. We were short 0.98369. When you're doing, scalps, even on the other one, the first trade we showed you, the scalps, we like to look at 15-minute charts or 5-minute charts. So on a half an hour or hourly chart, it looks a lot easier to trade, right? But on a shorter time frame, it's a little bit more difficult. But we were short from 0.98369, covered 0.98199, picking up 17 pips. We had 60% of our normal size. It was more of a pure scalp where we were only risking, I think we were risking about 65 or 70 pips in that vicinity. So we had 60% of our normal size. So it came out to 10.2 pips, and you can see what it did. We covered at a pretty decent price. It did break down about, let's call it 14, 15, 16 pips from where we covered, but only did that momentarily, and that was right above the figure. We probably should have waited on this trade to see if it would make a run to the figure, because that's what it did, obviously. But then overnight, it just broke down even more. Came in the office this morning around 6:30 or so, 7 o'clock, and we saw it was all the way, at that time, it was all the way down to 97.50, and then you can see what it did. It went all the way down to almost 97 even. So, but you're not going to hold a scalp like that overnight, so it's that kind of size. If you got a scalp where you got 20% your normal size, you could hold overnight as long as you have your stops in. But you got 60% of normal size, and you're not risking all that much. So just better to get out and move on. So that's it. We're going to wrap it up. If you're still trading now, good luck. If any signals come out, they'll be coming your way. And we'll be back tomorrow, assuming we get some action. Tomorrow is Janet Yellen giving testimony. Her semi-annual testimony starts tomorrow. So it'll be tomorrow and Thursday. But tomorrow will be the big day because she'll just reiterate. I think one is to the maybe one's to Congress, one's to Senate. I'm really not sure. But she'll just on Thursday she'll just reiterate what she said on Wednesday. So tomorrow is the big day. Not sure exactly what time that is. She's probably supposed to start around 10. Those things usually kick off a little late. And then from her years past of watching her and Ben Bernanke and what's his name there, Greenspan, they have a tendency to go on and on and on and on. These things can last from 10 o'clock to 12:30 in the afternoon. So, but that's it. We're going to wrap it up. So have a great day, and we'll be back tomorrow assuming we get some action.